Multinational conglomerate Nestle has been hitting the headlines for the last 2 weeks. It started with a report on how Nestle has been adding sugar in the baby food in the developing nations. In response, Nestle India said that it is making products as per the Codex prescribed by WHO and the local specifications as required. But this is not the first time Nestle has faced a scandal. You think about child labor in 2022, the unhealthy food portfolio revelation in 2021, and of course our maggi-ban of 2015. The list goes on. However, as we saw after the post-Maggi ban, Nestle has always been able to bounce back from these controversies. Whether it's timely course correction, innovation in the marketing strategy, or introductions of new flavor and products, they've all helped the company bounce. In the Maggi case too, the brand regained 60% of the market within less than a year of its comeback. Even in the baby food scandal, while there's a huge hue and cry about what is going to happen, there's a very limited response that is expected from the government. It has asked FSSAI to initiate action, but the problem is the government cannot specify Nestle-specific regulations. So there will be a lot of balancing game that will be played out and will be a relatively long drawn-out affair. So then our focal question is whether this drop represents an opportunity to invest into Nestle. Let's find out. So शुरू करते एक unbiased analysis on just based on facts on Nestle India. My name is Ashish Thomas. I'm an graduate and a management consultant. My daily job is to evaluate firms, understand their risk, and anticipate market moves. And I thought, why not apply all of this to stock market? So here we are, and let's jump right in. The first thing we're going to do is understand the company's business. So Nestle is the world's largest food and beverage company with more than 2,000 brands. Nestle India is a subsidiary of this Nestle group based out of Switzerland. So right off the bat, this firm has a strong group backing it. From a product, the company has 4 major product segments. The first is the milk product and nutrition, which contributes to 41% of the portfolio. Think about the brands like Cerelac here, Everyday Milk Powder, Nestle A+, Milkmaid. All of this contributes to this division. This division also houses the Nestle Health and Sciences division. Second is the prepared dishes and cooking aid, which contributes to nearly 31% and operates under the entire Maggi brand. It includes noodles, sauces, seasoning, pasta, and cereals under it. This division holds the pet food segment, which we will talk about. Third is the confectionery segment, which contributes to 16% of the portfolio and has brands like KitKat and Munch. And fourth is the powdered and liquid beverages, which contribute to 12% of the portfolio revenue under the Nescafe and the Milo brand. Now, so barring ketchups, in which it ranks second, Nestle is a dominant player across all the major product segments with a significant lead over its immediate peers. We're talking about 96% market share of infant cereals like Cerelac, 70% market share in the condensed milk like Milkmaid, and 74% market share in instant pasta and likes. So really strong positioning Nestle has in the market. Now, in terms of capacity, Nestle India has 9 manufacturing factories, and this capacity has been expanded by 2x in the last 5 years. They're investing in another major capacity expansion in Odisha for 8 to 9 billion rupees, which will be focused on building the efficiencies in the market. Now, I hope that gives you a good idea of what the company is doing. Now, there are 4 things that gives Nestle a competitive edge based on its current strategy. The first one is it's having a strong group backing. So the parent group has helped in a careful curation of the Indian products, help them customize the product to suit the Indian palate, and then support the Nestle India through innovation, branding, and marketing. You need to remember that only 9 out of the top 35 Nestle brands are present in India. So there's a huge push to expand the presence in the country by the main group. The second one is the technology-driven innovation which is happening. Technology has played a very important role in the growth of the company. What Nestle has done is it has divided India into 15 clusters based on the taste in the market. Project Midas, which is its data and analytics framework, has already given early gains as Nestle launched Korean noodles to tap into the new $650 million category in India, a South Indian variant of the Magic Masala, and a frozen Maggi Nutrilicious food range for the office goers. So there's a lot of data-driven innovation that it is doing. The third one is the product innovation in itself. They've spent around 152 billion rupees on R&D in 2023, and it keeps increasing by 6.5% CAGR. This is almost 3 times the R&D spend that the competitors are doing in this space. As a result, success rate of the new product is almost 60 to 70% for Nestle. And to continue this thread further, what India has done is it has aligned its strategy with the Government of India initiatives. For instance, the Cerelac, which is there, the millet-based infant food product, it has been launched to mirror the Union FY24 Union budget announcement to make India the hub of millet. So a lot of product innovation too happening in this space. And finally, it has a strong supplier and a consumer strategy. Nestle has a very strong distribution, which you can read here, as well as a very strong sourcing base, which avoids any disruptions in the market. Its Nesmestra app is already a preferred choice to order Nestle products for the merchants. On the end customer front, it has around 275 million customer records and around 37 content studios to provide the customer experience to influence it and drive purchases. This is actually evident in Nestle's current rural and urban penetration, which is there. In addition, it has also launched multiple websites like Nestle My Toddler for helping parents ask Nestle to develop meal plans, so it allows it to maintain the connectivity with the end customers. At the moment, in my opinion, existing players and new players are only playing catch up with Nestle India's capabilities to play in the premier segment and also to play in the rural segment effectively. And this is very evident from the Nielsen data, where Nestle has continuously and consistently outperformed the industry growth over the last 15 to 20 quarters. We also need to look at the two big moves that Nestle has been making in the recent years to remain relevant from a portfolio perspective. The first thing that they have entered into is the lucrative health sciences segment, and the second one is the pet food segment. Now, health sciences portfolio in India operates across 7 highly relevant categories like health supplement, weight management, and others. At a group level, health sciences is already contributing to 6% of the total revenue, and the same is being expected out of India. In lines, Nestle yesterday announced a joint venture with Dr. Reddy to enter into the innovative nutraceutical brands and offer them to consumers in India and other territories. So this is again a big revenue booster for the company. In the pet care division, Nestle's acquisition of Purina Pets has actually reaped dividends. They have now $6+ billion rupee brands which are there in the market right now. However, Purina is not yet a market leader, so there's definitely a significant push to grow in the Indian market space. Not everything is bright at Nestle. It's failed in its Maggi, Upma and Poha products. The Nest Plus cornflakes needs a major facelift. So Nestle is actually looking for acquiring Indian brands to strengthen its Indian palate connect. So more news to come across the year in the space. They've already also highlighted in their capex announcement also. So definitely some acquisitions to come through. With this, let's take a look at the financials. Before we go there, आपने काफी सारी stock market videos देखे होंगे, but nobody is going to the kind of depth like we are going today. So please like the video, do share it with your friends, and do subscribe. वहाँ पे all notifications click कीजिएगा so that you're up to date with all our new innovative stock shorts which are coming through. With this, the financials. Now, Nestle India follows a January to December financial model. In 2023, the total sales grew by around 13%, and the company crossed the 19,000 crore mark. In the March quarter of 2024, the results were announced yesterday. The sales grew by 13.3% on the back of pricing and the export growth which happened with a strong momentum in e-commerce. The cost of input materials like maize, sugar actually increased due to the uneven rainfall in the country. Conversely, the price of wheat and milk remained stable. Palm oil slightly decreased. The quarter was also marked with increased investment in the brand development across all the product groups. Both of them impacted the margins. However, the price hikes as well as the tech efficiencies that Nestle has brought in allowed the EBITDA margins to remain very high. In fact, higher than the last few years at 25.4%. Nestle India, as I was telling earlier, has announced its intent to incur around 5,000 crore capex till 2025 to further expand its product portfolio, set up new plants, and make those suitable acquisitions to revive some of the brands. In terms of the return of equity is around 108%, which is highest in the industry. Industry leaders are at like HUL is at 20%, Britannia is at 66%, so much higher than the industry averages which are there. Its ROC or return on capital employed is 135%. Again, it is the highest in the industry. Now, the thing is, it means that it is able to utilize its resources very efficiently in the market. If you look at from the final segment or the final part of the financial analysis, the shareholders, Nestle, the Swiss company, the parent company, is the largest shareholder at 62%, followed by the public at 24%. FII had have a stable stake of 12.1%, marginally increased from 12.06% in March of 2023. With that, a view on its risk. पहले काफी हाई कंपटीशन हो सकता है यहाँ पे, so it can become a cost game, which is a risky proposition because they operate in the premium market segment. दूसरा, any slowdown in the demand in the recessionary environment can impact revenues, and the concern again is in the premier revenue segment which they have. The third is the reputational risk. With already an unhealthy food branding and the increased sugar in infant diet, Nestle cannot afford more such reputational risk to come at this current stage at the moment. With that comes us to the evaluations. On the football field, equity research analysts are claiming that the share will be hovering between 2679 to 3100, predicting an upside to the share. अब इसका relative valuation is also an issue. The PE of Nestle is 80 with the industry median being around at 60. The EBITDA, the other way of doing relative valuation is 52, whereas the industry median is at 43. So relative valuation बहुत कम है, 1002 to 1246 के बीच में. On DCF2, which is the true cash flow valuation, the company is between 819 to 1270 at a WACC of 11.3% and a long-term growth of 6.5%. The final thoughts. अगर आप लोग कुछ भी अच्छा लग रहा हो वीडियो में तो जरूर लिखना what you want me to look into. I know I've been changing a little bit about the video and everything, so let me know if you like any of these edits that are happening. And do not forget to click on the bell notification. The goods. It is the market leader across all the segments. It has an innovation-driven product portfolio. It has a strong supply chain. It's part of the largest FMCG global parent group and has ventured into 2 new areas which are high revenue drivers. So all of this makes the stock very attractive. If you think about the risk also around the consumption, demand and everything, they are also going to be business as usual because it impacts all the FMCG companies in the market. However, the valuations are too low to justify the current prices. The other thing is the impact on the premiumized products which are there. Any demand impact can become a huge problem for Nestle. With that, my opinion is that you need to look beyond valuations for monopoly stocks like Nestle that, as we have talked about earlier. As Indian consumption grows, as the need for premiumization increases, Nestle will be in a very good position to capture the market. They're also known for being nimbly introducing new products and prices to match the evolving market needs. And finally, if the execution of these new two divisions actually work out well, it can be a true differentiator for the company. So if you have a moderate risk appetite, as well as you can keep stock for long term, you should keep accumulating Nestle on every dip that comes through. That's all from me today. Do note that I'm not SEBI registered, so this is my own independent view and analysis. Please do your own research before you invest into Nestle, and do let me know in the comments about what you think about Nestle as a share. Thank you.